In this video, we're going to be talking about what might be the best place to save money in Ireland, not only for the remainder of 2024, but for 2025 and beyond. Now, if you're the person who historically has kept all of your savings with the traditional Irish banks like AIB, Bank of Ireland and PTSB, and you've been doing that for all of your life, then I've got news for you. There are far better places to save money in Ireland. Places that are just as safe as the Irish banks, with the added benefit of offering far superior deposit rates, meaning you can earn more interest on your money while your money remains just as safe as it was with the Irish banks. One such place is with Raisin Bank, and that's who we're going to be talking about today. Thanks to Raisin Bank for sponsoring this video, and you can try out Raisin Bank for free by using the link in the video description. So why is Raisin Bank better than the Irish banks when it comes to saving money? And why should you consider moving your savings over to Raisin Bank? Well, it boils down to two main reasons. Number one, Raisin Bank allows you to access higher deposit rates for your savings than traditional Irish banks, which in turn means that you'll earn more interest on your money with Raisin Bank. For example, you could deposit between 1 and 100,000 euro in this particular account offered by Blue or Bank on Raisin, and you'd earn 3.65% interest. TLDR, none of the offerings from AIB, Bank of Ireland or PTSB are as competitive as the best options available on Raisin, and this can be highlighted by analysing the best offerings of the traditional Irish banks. AIB, for example, offers a personal fixed term deposit rate of 3% over 2 years. However, better options exist on Raisin Bank, not only because AIB requires a minimum balance of 15,000 euro, but also because there are more attractive rates available for 2-year fixed accounts on Raisin. Side note, for those of you who are availing of the 3% online regular saver with AIB, which is a variable rate account, you might not have known that after 12 months, the figure that you earn interest on reverts back to the month one maximum balance of 1,000 euro. This means that the most amount of interest that you'll earn will be in the 12th month only on a maximum balance of 12,000 euro. Raisin Bank, on the other hand, has variable rate instant access accounts with rates as high as 3.09% with maximum deposit amounts between 85 and 100,000 euro, allowing for much higher interest than AIB's online regular saver account. PTSB has a 2.75% 1-year fixed term option for deposits over 5,000 euro and between 2 and 2.5% for terms varying between 18 months and 5 years, all with 5,000 euro minimum deposits. Bank of Ireland offers a 1-year fixed rate of 3% on their Super Saver account and up to a 2.96% fixed rate on their fixed term products, varying in duration from 6 months to 24 months, again all with 5,000 euro minimum deposits. Put simply, when you compare the Irish banks with the accounts available on Raisin on the basis of both minimum deposits and the fixed rates on offer, Raisin Bank wins out. Number two, the money that you deposit via Raisin Bank is 100% safe and secure. Reason being, all of the savings accounts that are offered on Raisin are fully protected up to 100,000 euro under the deposit guarantee scheme. This is the exact same type of guarantee scheme which applies to your savings that you hold with AIB, Bank of Ireland and PTSB. So there's no reason to have any doubts about the safety of your money on Raisin. It's perfectly safe. In short, when we compare Raisin banks to the Irish banks, you're getting far better value for money and you're getting just as much deposit protection as you were before. It's a win-win. What's really cool is that not all accounts on Raisin Bank are born equal. You actually have the ability to choose exactly what type of savings account that you want to put your money in. In fact, Raisin Bank sources its savings account options from 17 partner banks who collectively are offering Irish customers access to over 80 unique savings accounts. When looking at your options, here's 3 simple things to look at. Number 1, term deposit accounts versus demand deposit accounts. The difference between the two is relatively straightforward. If you select a term deposit account, you'll receive a guaranteed rate of interest for a specified period of time in return for your cash being deposited for that length of time. If you select a demand deposit account, the rate of interest you receive isn't guaranteed and can increase or decrease, but you can access your deposit deposited cash at any time. Which type of account you choose largely depends on one key question. Do you know with relative certainty that you won't require a portion of your cash for a known period of time? If the answer is yes, then it could be an idea to go for a term deposit account, which has a fixed period that is the same length as the period of time over which you won't require your cash. When looking at term deposit accounts on Raisin, you can clearly see the fixed term duration for each account. This is the period of time for which your interest rate will be guaranteed and the period of time for which your cash will be deposited and therefore inaccessible. As you can see, with demand deposit accounts, your cash is available to be withdrawn at any time, but the rate offered is subject to change. Number 2, the rate of interest on the savings account. The interest rate attached to each savings account is what will determine how much money or interest that you'll earn on your deposited cash. As a general rule of thumb, on Raisin, you should generally choose the account that will earn you the highest amount of return over your desired deposit term. Just a quick tip, if you type in the amount that you have available to deposit and you set term to show all, then you'll see all of the term deposit accounts that are available for your deposit amount. If you know exactly what term you're looking for, then you can choose between a range of term options. One of the most helpful tools on Raisin is their interest calculation. This will provide you with an estimate of the interest that you'll earn based on A, the deposit amount that you specified above, and B, the fixed term duration. This makes it easier to compare accounts given that you're comparing based on the estimated euro amount of interest that each account will likely generate. Side note, all savings accounts on Raisin have minimum and maximum investment amounts. The minimums can range from as low as 1 to 1,000 euro and even 20,000 euro or higher. The only impact that this could have on you is if your available deposit isn't as large as the minimum investment amount of a particular account, then that account wouldn't be available to you. Not the end of the world. The most common maximum investment amount is set at 100,000 euro, which is done in order to fully utilize the deposit guarantee scheme. In other words, you're getting the maximum amount of return out of the account while also remaining in a risk-free position. And number 3, withholding tax. Certain accounts on Raisin have a notice which states no withholding tax. Now, wherever you see this, that means that you'll receive 100% of the interest earned from that account at the point of payment, which is what you might expect. However, wherever you don't see this, that means that foreign withholding tax will be applied to your interest before you receive it. In other words, you may receive, say, 85 or 90% of the total interest earned. Where foreign withholding tax does apply, you can see the exact details of the applicable tax rate and what you can do, if anything, to reduce that tax rate in the offer details of the account in question. There are 2 important things to understand here. First of all, paying foreign withholding tax on your interest does not exclude you from having to pay Irish tax on your interest, meaning you still have to pay Irish deposit interest retention tax or DIRT on the gross amount of interest earned. That means the amount that you declare to revenue and the amount that you pay tax on is the interest earned before foreign withholding tax was deducted. Now, that might sound strange seeing as you didn't actually receive the gross amount, but what normally happens is that you'll likely receive a tax credit equal to the foreign withholding tax paid against your Irish tax liability. This usually makes the net position after tax the same as if you had just paid Irish DIRT of 33% on the gross interest. Secondly, there are circumstances where the existence of foreign withholding tax could make one account on Raisin less favorable than another. For example, if you had to choose between 2 accounts with identical interest calculations, but one of those accounts charged withholding tax, then you'd likely always go with the account with no withholding tax. Reason being, from a cash flow and simplicity perspective, you'd much rather have 100% of your interest available at the point of payment and pay Irish tax on that payment only when the pay and file dates arise after the fact, as opposed to suffering foreign withholding tax at source, having less interest to play around with, and having to deal with the complexities of getting a tax credit for foreign withholding tax suffered. A big part of the reason why Raisin Bank is contending for one of the best places to save money in Ireland in 2024 is because they're offering competitive term deposit accounts. Term deposit accounts are attractive right now because because the European Central Bank, whose rates influence deposit rates across the euro area, cut rates in June, and they're expected to continue cutting rates later this year. This makes term deposit accounts attractive because by setting one up before ECB rates are cut, you're guaranteeing yourself today's fixed rate of interest for a specified period of time, even if ECB rates subsequently fall. Therefore, anyone interested in Raisin Bank today could be wise to take advantage of the fixed term rates that are currently on offer. I regularly get asked about who Raisin Bank is best suited for, and my mind always goes to three groups of people. Those who regularly have excess cash just sitting in an Irish bank account earning less than 0.5% worth of interest, which by the way is a lot of people. Those who are actively putting money aside for a known event in the future, like buying a house, saving for a wedding, or moving abroad. And those who are approaching or are in retirement and are looking for risk-free competitive returns for their cash deposits. Another aspect of Raisin Bank that I regularly get asked about is around their customer service options and what's on offer in this department. This is something that historically hasn't been perfect and no customer support is, but has improved significantly over time. In fact, when I was recently talking to a business to consumer manager at Raisin Bank Ireland, they explicitly noted that they had listened to the feedback of customers and actively made significant improvements to customer support. Raisin Bank customers currently have three unique ways of getting in touch with customer support. Firstly, they have a dedicated Irish customer service phone line on +3531 546 1020, operating Monday to Friday from 11 a.m. to 3 p.m. Secondly, they have a dedicated Irish email address which is tracked by their Irish customer service agents at service@raisin.ie. And finally, customer support can also be contacted through your Raisin account using the built-in messaging service. A common misconception is that you need to switch banks in order to use Raisin. You don't. Raisin Bank isn't a normal bank. You're not receiving your paycheck, making transactions, or spending with a debit card using Raisin. Raisin Bank is simply a marketplace of high-interest savings accounts for you to access. Therefore, to use Raisin, you simply transfer money from your current bank account to your Raisin account and deposit that money into whatever savings account you want on Raisin. It's as simple as that. Better yet, Raisin Bank has introduced a user-intuitive mobile app which now allows you to use Raisin Bank on the go. But before you get to that, you need to set up an account. And right now, you can get yourself a free €50 by signing up to Raisin using my refer a friend link in the video description and comment section below. Interestingly, as part of Raisin Bank's refer a friend program, once you're set up with an account, you can generate a refer a friend link to start earning €50 for both yourself and your friends for each successful referral that you bring. This is a great way to get friends and family involved if and only if you enjoy using Raisin Bank, which of course is entirely up to you to decide. The sign up process itself is relatively straightforward with the usual steps, including verifying your identity, verifying your address, and linking your bank account. As I said in a recent video, Raisin Bank is off in a league of its own when it comes to savings account options in Ireland, primarily because it is the clear market leader for fixed term accounts. But with the recent addition of demand deposit accounts yielding over 3% in annual interest, Raisin Bank is starting to become an attractive option for those looking for both high interest and instant access to their money. Let me know what your thoughts are on Raisin Bank and whether you're thinking of setting up an account yourself. If you've used Raisin Bank and want to share your experience with other people, please feel free to do so in the comment section below. As always, if you've any questions on any of the content that was covered in this video, please don't hesitate to leave it as a comment down below. Thanks very much for watching, and I'll see you in the next one.